Good afternoon, everybody. My name is Michael. A few days ago, I put up a forecast on about a half dozen Facebook pages focused on the E-mini S&P. I want you to see here 2 days ago what we talked about in that post. And I want to share with you, hopefully by the end of this seminar, you will be a believer. Most of the comments have been laughing in my face emojis, mocking me, crazy person, all sorts of fun names the last week or so. But a week ago, or 2 days ago rather, I said we are on the right side of the new moon cycle. And I specifically highlighted this is a period of panic, paranoia, and historically selling. Based upon that cycle and the splits diagram below, I anticipate more selling in the next few days, with a final drop approaching 100 points total. And so this was in the E-mini S&P 500 futures Facebook group, and at the time, we were pretty high up. We had just formed a new market high, and the new moon had closed right here, and we were more or less right where that full moon close was at the time of the forecast. Did any of you see that when we were posting those across the different Facebook groups? You did? Yeah, okay. What I went on to further do, I sort of took it one step further, and I said, hey, if we look at how far each of these new moon sell-offs have been, we can have a pretty good idea as to how far the market will move down. And so I measured how far each of those pushes were the last several times we had a new moon, the last 4 cycles, in fact. And I specifically mentioned the levels right here, and I said we're going to hit, more likely than not, 41.26 to 41.15, and then by the end of the cycle here in about 11 days from now, 10 days from now, 40.61. So that was 2 days ago, or that was yesterday. And so here we are, and I want you to see where the market hit and bounced. We came down, hit 126, then we came down to 41.14 and reversed up. I also mentioned during the course of those micro lessons in the Facebook groups that when you have 2 points in time, we'll see several examples of this today. The distance, for example, between the new moon and the full moon is so many days, hours, and minutes. You can take any gap in time, and just like you can with fibs and price action, you can split any gap in time into thirds. And so here we can see the 33.33% split and the 66.66% split. And so today, as we were starting, I predicted today would be a bull day, and we would see a push up into the next red split, and then probably a drop down towards that 40-60 level. And as you've no doubt noticed, the market has been slowly and steadily rising ever since. And here we are today on our E-mini S&P warp chart, a daily chart which analyzes the times that markets are likely to go up and down. And we'll see right here that the prediction for today, the 25th, is bullish until June 6th. So we should see some type of a push up here over the next couple days, which is in line with our lunar analysis. Stanley wrote, I saw last Thursday in your presentation, I halfway believed you, so I only made half as much as I could have in the S&P. Now, I don't normally toot my own horn. However, there are very few people, if any, on the planet Earth who know as much about predicting time movements as I do. All I've done for the last 15 years is study this stuff. And so this morning, for example, when I'm making all these assertions and making all these posts, I'm putting the times in the chart in advance. So this morning in that E-mini S&P group, and we'll talk about these predictions in a minute, I gave everyone the market times in advance for the open into the close. And earlier today, I want you to see, I always put my money where my mouth is. I always put it out there and let people know what we're expecting. And so earlier today, you can see there were the times that I was waiting for the 5-minute E-mini S&P movements. I had even gone so far as to put a 1-hour intraday predictive chart up and made the assertion per the following. On the E-mini S&P 5 and 60-minute intraday predictive time charts, we have a window between 9:45 and 10 a.m. where buying is likely to occur today. I have today's 5-minute predictive time signals attached for your review. So there it is, 9:45, we're looking for a move up, very high probability. This was in advance, but you'll notice, Tim, coming into that move, that I drew a split, just like we were able to do on the full and new moon chart. And I had seen a double top stop run coming into the red split. I didn't take this signal with trend, but I did see an opportunity here, low risk, bearish engulfing candle. And using the same technique that I've demonstrated now on the Facebook groups for weeks and weeks and weeks and weeks, and the webinars for months and months and months, we were able to locate a short based on time. And then Tim, right over here, 9:45, hours after the post, across 6 different trading groups, about 50,000 people total membership, we have the infamous 9:45 entry. And so I exit the long position, and now we're starting to look for a long. And so it's one thing to mock, it's another thing to ridicule things you don't understand. But guys, look what happens right here at 9:45 today, 2 hours after the post, 2 hours after telling nearly 50,000 people what the facts were telling us. Where did this time come from? Why does the S&P start to form a bottom here at 9:45 and go up 10 handles from the open? Why does that happen? And how can we know in advance when that's going to occur? Hey, Billy. Billy, I understand you've had about 85 conversations with Dave at this point. This is your second or third webinar. Why don't you just hang back a second as we get into the example? The 945 candle in this example, based off of the post in front of 50,000 people, is right here. So Bill, when we look at the signals for the day in their entirety, we start to notice some things, don't we? You start to notice, first of all, Bill, that I gave everybody all of these times 2 days ago. So these times were published on the webinar histogram forecast page on Tuesday. Does everybody agree with that? 2 days ago, everyone got the forecasts for these times. And so, Bill, we were expecting an up move at 5:10. We were expecting a down move at 6:15. We were expecting an up move at 7:50. We were expecting a down move at 8:20. Using the technique that I've taught you now a dozen different times since you've been here, we were expecting an up move at 8:50, which I just described. And then, Billy, we were describing a down move at 9:15. Blink twice to acknowledge if you're following along. I know you have a lot on the line, Bill, and you have to make this work. It's a matter of dollars and cents for you. But while you're saving up and getting all your shekels together, it's important that you learn the stuff that we're talking about here today. So Billy, up until that point, would you say that the software, the technique that I've developed over the last 15 years is holding water at this point? The premise that we can predict days, hours, minutes into the future where the market is likely to go most of the time. That premise, in the broader context of the movement so far, is hanging up pretty good, right? So we'll put some agreement arrows here as though to say, yeah, that move kicked in and that move kicked in. Now, Bill, at 9, per the Facebook post, 9:45 to 10 o'clock, what am I predicting before the market opens? What am I predicting back here to 50,000 people when we get into 9:45? Market's going to go up, right? So what happens in this area right here? What does that look like to you? The market had just fallen. I want you to remember, it had gone from 41.66 quarter until 9:45. It had fallen $27. It had fallen $27. It had only gone up 16 in the last leg up. So what are most people thinking at this point? Billy, what would you be thinking outside of and apart from my guidance with these tools? Retesting the low, market's probably going to go in what direction, Stanley? McCarthy, Biden, China. Yeah, it's probably going to keep falling. It's been falling. It's been doing nothing but falling. So it's probably a brave call, risky call, to say it's going to reverse at 9:45. And so you begin to see an accumulation phase. That's correct. Now, Bill, on either side of that 9:45 bar, what color are the candles? It had gone down at the 9:40 bar, and it had gone down at the 9:50 bar. What color was the 9:45 bar? Up. Now, I want you to think about that. The buying starts right here. Right there. Doesn't start here, it doesn't start here, it doesn't start in the middle. The candle opens at 9:45 at 41.40, and it goes right up to 41.47, $7 straight up. That, my friend, is kind of a little bananas. So again, in the totality of the signals from the pre-market London until the open, 1, 2, 3, 4, 5 so far, with 5A and 5B in the middle. What is going on? I have to get my brain straight here. Hold on. Billy, it's supposed to rise now until what time? $11.25. Now here's the bananas thing. It's off by 1 bar from the actual pivot right there. The actual high of that swing is at 11.20. It's off by 1 bar. They start 5 minutes sooner. So it goes from 9:45 until 11:20. It had gone from 7:50 until 8:20. It had dropped from 8:20 until 9:45. And what's the next direction? Down from 11:25 until 12:20. Now at 12:20, the candle closes here, and it basically finishes exactly where it starts by 12:55. At 12:55, so we'll call this a right? And then at 12:55, Bill, here's the thing, it opens and it drops. It doesn't go ridiculously far, but how far does it go? $350 per contract. So I'm going to count that one. There was a turn, it wasn't huge, but it was there. And what was supposed to happen at 1:55? Did it go up at 1:55? From the close of the candle to that peak, it's nearly $20 in the positive direction. What would happen if you drew a split between 9:45 and 11:25? That's a good question. So again, you can take any 2 points in time on a time-based chart. And if you want to see the cycles inside of the cycles, you can cut those into thirds right there. Okay. So that means there would be a red right here, and there would be a green right there. Yeah, you can use a 25 EMA. I use a 20 for my personal stuff. So now, in the entirety of it all, Billy, that's not too bad for a 2-day-old guess. Wouldn't you say? How are you feeling? Is everybody okay right now? Blink twice if you're doing all right. What we're talking about is this idea of predictability. We've been doing this for the better part of almost 15 years now. And our theory is that the people who run the game know the outcome before the game starts. They know how many houses will be on Boardwalk, how many houses will be on Park Place, how many hotels. And while you're rolling the dice and going around the board thinking you have a chance, you've already lost. So, hang on one second. Mike, the ES 5-minute chart on TradeAvate is not lining up to yours. Not sure what I'm seeing wrong on my end. So Billy, I'm going to right click. I'm going to go to reload historical data. So it went out to the NinjaTrader data server, which is connected to the CME and CBOT, and it loaded the 5-minute bars. If the 5-minute bar shows a down bar, then it's a down bar. So Bill, I don't know how to make my chart look like your chart. Hello, John. So that's not a problem I can solve, right? Data feeds. That's all I know in terms of what I have. So this idea that we can peer into the future, whether we're using sunspots and lunar signals or intraday data mining, is, John Dave will help you with that question, is pretty murky for a lot of people. They're like, well, how can you tell what's going to happen in the future? What about all these reports? What about all these unknowns? What about the stuff that's going on in Ukraine? What about the stuff that's happening in Congress? And it's actually kind of cool when you open up your mind just a little bit to the possibility that things are not as random as they seem. So what we do every week to kind of prove that is give people who are looking at our website a chance to watch these predictive times. And so every Tuesday, Billy, in the beginning, you shouldn't know. In the beginning, you shouldn't be looking at that. You should only be looking at the warp stuff for at least 6 to 8 weeks. Yeah. So what we do is we publish these times in the future, and we sort of say, look, here are the signals that we're watching for Thursday. But Bill, that picture, this screenshot was published on Tuesday. You know that. So this has been here in the public space since Tuesday. And all of these times were an estimation of what will happen on Thursday. So when we're putting that stuff out there, we're essentially challenging a lot of what everyone has believed is truth. This idea that I've got to use an 11-2 Renko bar with a 38 period Jurek zero lag moving average and my order flow analytics set to a delta of whatever the hell. And you're sort of running behind a cocaine-induced tiger trying to grab its tail. What was that movie, the Cocaine Bear? You're running behind Cocaine Bear with all of these fancy tools that you've paid tens of thousands of dollars, and some of you even more. And there's this little chart that's telling us, hey, there's a code based on time of what's happening. One of the simplest ways to see if the times are repetitive, let's look at a couple more examples before we look at a very simple technique. If you traded gold futures today, Billy, we're looking to see if what was predicted 2 days ago actually happened in the future. So these signals on the bottom of the chart have been available since Tuesday, right? And so this is one of the precious metals that you're able to trade in the futures market. And Bill, down from 655 until 820, up from 820 until 835. And now what's supposed to happen at 835 as per our notice on Tuesday? A drop from 835 until 950. So we fall from the open of the candle 1960 to a maximum favorable excursion of 1939.3. So $20, $2,000 move. And then we finish at 950 where it pushes up until when? 10:45. When's the next wave supposed to occur down? From 10:45 until 11:45. When's the next wave supposed to come up? From 11:45 until 12:20. From 12:20 to 1:40. 1:40 until 2:15. 2:15 until 3 o'clock. Now there was a pretty big report at 8:30. Unemployment. So Billy, 2 days ago, before the report was released, before anyone was supposed to know what was in it, right? We had this. And Billy, you see where it says 8:35 until 9:50 right here? That's been since Tuesday. How did the software know? How did the software know what market participants were going to do in precious metal futures 2 days before the report? Well, either we were really, really lucky across the 7 or 8 times, or the market was manipulated. Who would ever manipulate gold or precious metal futures? Well, I'm glad you asked. The company that just bought one of the largest regional banks, JP Morgan. They bought a bank in the 2008-2009 Great Recession. They bought a bank now in the post-2020 recession. Every time the poop hits the fan, JP Morgan comes out ahead. And you know what they got in trouble for? They got in trouble for manipulating precious metal futures. They were spoofing gold futures. And if we look at what was predicted 2 days before the event in gold, boy, it sure looks like, Billy, that somebody knew what was going to happen at 8:35, and somebody knew what the report was going to say, and somebody made a crap ton of money in precious metal futures. $1 billion fine is nothing to them. It's nothing. It's funny money. James, I'm not talking about the trading system per se. I'm personally at the close of the bar guy. I would have entered right here at 1951. But I want you to see, parenthetically, anecdotally, that there's no way we could have known what all these moves would have been 2 days in advance, right? If we come back and we look at one of my favorite markets, oil futures, James, we're sort of left with some more uncomfortable questions, right? Oil seems to be pretty manipulated as well. If we take a quick look at what was anticipated since Tuesday, and we just do a cursory examination of the morning, we're going to come away with a sort of sick feeling in our stomach. From the London Open, 5:45 until 6:09, 6:09 push up, 6:54 we finish a little bit lower, 7:39 we go up. At 8:18, this is not a good signal. At 9:03, it's not a good signal. But then at 9:30, it drops until 10:09. It goes up at 10:09. There's basically no movement from 10:36 to 10:45. It goes up at 10:45. It goes down at 11:24. James, it goes up until 1251 from 1206, and then down until 203, and then up until 227, down until 228, and up until the close. So from a casual observer's standpoint, one of the most actively traded futures markets, when we look at that in relation to what was projected from the software's analyses, right? We can come back and look at CL on a 3-minute time frame. You guys can hold my feet to the fire and compare all the times that are on my chart to what's been publicly published since Tuesday. This is a 120 EMA on my chart. I only use a 120 during the webinars. So James, we're sort of looking at it from a signal versus entry exit perspective right now. Now, before I show the entries and the exits that I teach, pretty basic system, I just sort of want to ask the question. Would you say that the signals were 0 to 25%, 25 to 50%, 50 to 75%, or 75 to 100% in terms of when we arrived at the time, the thing we were expecting to happen happened or not? And so I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 signals that appear to go in the direction that I'm anticipating the market to go. And then I have 2 which don't. 3, let's call it 3, 1036. What I've said for the last decade plus is that generally speaking, we land most of the time when we review any of the markets in the webinar around the 60 to 70% mark. Conservatively. Sometimes a lot more, sometimes a little less, but generally over the last 10 plus years of doing this once a week, 550 webinars a year, close to 600, 700 by now. Billy, we see that there's this idea that if we wait, just like when we were looking at the full moon and the new moon, if we wait and study and analyze those things, there's an expectation of movement, meaning way over here in the lunar side of things, I know how first quarter phases move. I know how they move. They're big, punctuated bull bars. They move with ferocity. And I've got another one of those coming in 4 days. I know what tends to happen at new moons. They tend to drop, and lately they've been dropping about 100 points. And so I've cultivated an attitude of expectation in markets. If I know this, then Jamie Dimon at JP Morgan sure as Shinola knows this. I can't be the only person that knows people tend to buy at full moons and they tend to sell at new moons. In fact, who would have gotten that idea? Who could have known this besides me? Who else would be taking advantage of that opportunity and playing on people's psychology and physiology? Well, this guy. Millionaires don't use astrology. Billionaires do. Sorry, Billy, I can't do that. Millionaires don't use astrology, guys. Billionaires do. So this guy told his son, and his son told the next son, and his next son told the next guy, listen, people don't believe it about themselves, but you will know something about people that they won't admit to themselves. And you can lead them into stop runs right before it happens. What do I mean by that? John, check this out. This is the price, the high of the new moon signal. The high of that signal right here is the highest high on my chart. Everybody see that? John, what did they do right before that move? That, my friend, is called a head fake. It's called a stop run. Why would they, Dave, why would they execute a stop run the day of the new moon when people are maximally charged for paranoia and fear across the globe? Why would they lead people falsely into a breakout the day of the reversal? Anybody? Come on, think like a conspiracy theorist with me for a second. Why do they do it? That's right. It creates a stampede effect. Creates confusion. And it creates liquidity. We are essentially buying the shorts of the institutions at the high. Now, surely that didn't happen over here, did it? Billy, when are people most likely to start purchasing? Right here. What did they do right before the full moon, Bill? Boy, that sure looks like a what? A stop run. What did they do in the last cycle? There's the all-time high. Oof. Boy, that sure looks like another one of these, doesn't it? And here's the fun part. When you really start to get into it, you'll know about how far they run the stop. Ask me about that another day. Somebody knows something about you that you don't acknowledge to yourself about yourself. That you're connected to the invisible weather, the invisible environment around you. And when that energy shifts and that energy changes, you're physically predisposed to fear and greed. And they know that about you in advance. So it stands to reason when we look at a market like this, John, James, that of course oil is predictable. Of course gold is predictable. Of course the NQ and Tesla and GE and Amazon and Netflix and all the meme stocks are predictable. So how do I trade it? Ready? Here's how I trade it. At 5:45, on the close of the 5:45 candle, I'm entering short. My stop is 1.5 average true range values away. I'm going to enter short with a stop one tick above the blue line at 73.58. And I'm going to exit, James, at the close of the opposite signal. So if there's a behavior pattern in the past that's repeating, and that behavior pattern is down at 5:45, and the moving average is showing that we're moving lower, I want to be involved when someone pours gasoline on an already raging fire. And I know the times in advance, so I'm not anxious. I'm not sitting here like a maniac watching 19 colored things and 58 levels and the dome flashing, buying and selling and levels and the things you guys do. When I see your screens and you tell me what software you're using, I have an epileptic fit sometimes. And I exit at 6:09. That's when the behavior pattern's usually over. Close of the candle. Plus 19 ticks. 6:54. Close of the candle. Stop is 1 tick above the blue line. I exit by 7:39. Plus 5 ticks. 8:18. I enter at the close of the candle. I'm stopped out 1 tick above the blue line. Minus 16. 9:30. Close of the candle. The stop is larger now because the market is more volatile. The average true range is telling us 3-minute bars are bigger now than they were an hour and a half ago. But the potential for reward is larger now, and we exit, James, at the 10:09 close, plus 45. Next signal in the direction of the trend is at 10:36. We exit by 10:45. We give back 30 of the 45. Now here's that number that I want to be in when the Saints go marching. At 11:24 at the close of the candle, 7:27. I know exactly when 7:27 will close. I can count down like a rocket countdown and place my order at the close of that candle, minimizing slippage. And I'm in it, 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 and I get out at 12:06 at plus 93. So from the London to the US, the London Open to the US lunchtime, plus 19, plus 5, plus 45, plus 93. So 130, 150, 120, about 100 ticks, which is $1,000. If you take off the London stuff, it's about $700. So Billy, what you're asking me, what you're pleading with me for is to give you a machine that returns your investment in 1 day. You're asking for, you believe the value of this is such that you should pay $900 for a machine that made 1,000 in 1 day. Or if we go back and look at any of the S&P trades, that's a $500 move up. That was a $500 move up on the pullback the second time I took that trade. And then I had the drop earlier in the morning. That was a $500 move. So you want to pay $900 for something that made $1,500 in 1 day. It makes no sense to me. It kind of insults me a little bit. But I get it. I get why you're asking for it. Asking's free. Asking is always free. And it doesn't hurt my feelings for more than a few seconds. It just makes me a little sad. Now, there are other signals inside of this, John, that I also teach that are called punctures. Punctures are some of my favorite trades. And I want to talk to you about how there was even more meat on the bone. No apologies necessary. I just want to put your expectations in context, right? Most people have spent, on average, when we ask them, $50,000 to $100,000 on software that didn't work, that didn't do 1/10 of what I'm showing you here, backed by people who used to own bars. One of the most prolific sales organizations of a particular trading system available on the web right now is run by a man who used to own a tavern His bartender managed the business, and several of his bouncers were salespeople. Charges upwards of $10,000 for his software based on support levels, resistance levels, Renko bars. No one says to that guy, hey, I'll give you $500 for it. No one. And when people finally find us, they say, oh, I wish I'd have known about you 10 minutes ago before I put a second mortgage on my house to buy this special range bar that I bought. Right here at 9:03, John, check this out. At 9:03, the market is supposed to go up. That's the behavior pattern. That's the behavior pattern. 9:03, we're looking for an up move. But the trend is down. I want to sell. Everybody else is selling. If everyone else jumped off the Brooklyn Bridge, would you jump? No. I don't want there to be any buyers. So historically at 9:03, we know that 60 to 70% of the time, Billy, it should do this. It should go up, but it's not going up, Stanley. Stanley, it's starting to go the other way. It closes lower. It's going lower. It's going even lower. The odds of there being any buyers, are going lower and lower and lower and lower with each passing second. So John, right here, when it breaks through the buying signal stop line, that's a big alarm in my head. No sellers detected. Safe for shorting. The behavior pattern that's existed over the last several weeks is not following through. It's not being fulfilled. It's not doing what most of the other signals we've seen here today are doing. So John, I bet. AJ, good catch, by the way. You should marry that one. I go short one tick below the stop line. It's a breakout trade for me. And I'll put my stop one tick, two ticks above the candle that punctured the buying stop line. This is a failure with trend, a failure of the institutions to follow through on an established behavior pattern. So I'm going to enter when it punches through that line. My stop is going to be above the puncture candle. Now, how long am I going to stay in this trade? If everything is based on time, AJ, how long am I going to stay in this trade? I'm working from window to window, right? I'm moving from window of time to window of time. Everything that has a beginning has an end. So if the window of time starts at 9:03, it ends at 9:30. That's right, I have 27 minutes. So the minute it punctures that bar or that line, I'm in it, and then I get out at 9:30. So Billy, there's another 53 ticks that we didn't account for from that puncture trade. Now, before you say you are making up the rules to this, I just want you to see that I teach this stuff every week. I told you before we had the signals what we would be doing. We will be showing how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. And the video goes through the rules. How big will your stop be? My stop will be 1.5 average true range values away. Before the market opened today, before we knew what the report was, before any of that stuff in oil took place, Bill, we had the rules of the trading system. We have the times and directions of the signals in advance. So what are the chances? What's the likelihood that we'll overtrade if we're using a system like this? Right? Some of the biggest, largest issues that traders come to us with. I overtrade, my stops are too large, and my targets are usually cut short, too small. How do we address that? Well, in our worldview, these moves are sort of foreshadowed. The banks are leaving evidence in the historical data of what they're likely to do again, sort of like an abusive spouse, right? If somebody treats their wife a certain way one time at a 4th of July party, I'm pretty sure when they're in the confines of their home on New Year's Eve, that Fred's not a tender, gentle man. I'm pretty sure it's a habit. And in that same sense, if we come here one week and we're able to forecast what JP Morgan's going to do to the price of oil, I'm fairly certain when we come back next week that we'll still be in that 60 to 70% window. And so the odds of overtrading begin to diminish exponentially. There are only 15 times that I'm allowed to trade between when I wake up and lunchtime. I can come in and draw some splits if I want to do it, but max, let's say that's another 6 times. Some of you take 30 or 50 trades, 30 or 50 trades when you're trading. You're junkies. You got a problem. The other side of that is the stops. Most of you give trades, quote, more room to breathe. You move your stop away because we're predisposed to run from painful things. Fight or flight is a powerful reptilian evolution. We don't put our hands on hot things. We don't put stops near price action. Well, with these signals, it either works now or it doesn't. It either works now or it doesn't. And so we can be more judicious with our risk. There's less guesswork involved, less hope. I remember about 16 years ago, I was in a trade with another guy. He was a fundamental Christian, and it had the hallmarks of a revival prayer meeting. There was singing, there was pleading with the universal deity, please make the market go down. Hope. Hope is a dangerous thing. In this system, it's time. It either works or it doesn't. Now, not 15 minutes from now. No prayer session required. And the third and final dimension is, how long should I stay in the trade? Most of you listen to that Jiminy Cricket voice in your head. Now, Billy, I'd get out right now. If I were you, you're up 6 ticks. Oh. And the software goes, dude, you got 18 minutes. Go bake a muffin. Make a piece of toast. Take a loofah and get some of those calluses off your feet. Do a stretch. Try to do a sit-up. It's going to be all right. Let it go. So that third one, I think, is one of the bigger benefits of a program like this. If the trade is working, how long do I have? Well, historically, you have 8 minutes, 18 minutes, 80 minutes before we know to get out. So when I sold at the high today up here at 9:15, I knew I had until 9:45. I knew I had until 9:45. I could have got out at this little stall, this little pullback. That's when most of you get out. James says, hey, after a puncture, why wouldn't you stay in the trade and continue? You can. You absolutely 100% can. James, a lot of you guys ride the thing as long as you can. My personality, I get in and get out. But in an ideal universe, James, here's what a trail would look like. A buy signal, you get in, you get to the next sell signal, and James, you watch. And if it punctures that line right there, you stay in until the next buy signal, and you ride it again until the next sell signal, and you see, did it puncture the line? If it doesn't puncture the line by the next buy signal, James, good time to get out. Punctures are telling you that the trend is continuing. They're telling you that the trend is strong and healthy and overpowering the selling times or the buying times below. So when you see those lines, it's a very, very, very strong signal that the next move is going to be an even bigger one. And here's another way to think about that, James, right? Check it from a different perspective. When you see this happen, immediately go to here in your mind. I'll say it again. When you see this happen, immediately go to this signal in your mind. They were supposed to buy at 9:03. They didn't. Oh, that means at the rodeo there were no bulls in the buying chutes. All the bulls have been loaded in the selling chute. James, tell me if you understand that. This is a early tremor before the earthquake. When you see that signal, does that make sense? It's letting you know there's no one on that side of the aisle interested in buying that. Hang on, here we go. Right? So you can see an example of that on the Dow in the afternoon right here. Here's a great example. James, there's the puncture in the Dow using the signals from Tuesday. Trend is going to go stronger. If you were long from the signal back here, stay in it. If you were not long and you see this happen, when it was time to sell, they tried. They held it. It was holding. It didn't go down very far. And then, whoa. Hey, come on, you're supposed to sell now. Cut it out. You know what that means? There's a bunch of dudes in the basement programming something into the algorithm. They got a phone call from their boss on the 185th floor. Gentlemen, release the Kraken. And at 15:21 on the close of that candle, look what it does. Like an explosion. Punctures will foreshadow the next movement more often than not. Good insight. But otherwise, you can hang in there. You can hold on. You can trail it using the time signals. You're absolutely correct. Any other questions about that? So James, taking what you've just learned, what can we conclude about Tesla stock right now? Taking what we've just learned, everybody, what can we conclude about the overall direction of Tesla stock moving forward into the summer? Which direction should we be looking for? Yeah, AJ got it. 100%. Look right here. Blue puncture. Again, blue puncture. When's the next buy time? June 5th. Huh. Okay. What's another good stock? We'll check out Amazon. We'll go back. Follow that same example here. March 13th, Billy, do you see the puncture right there? What is that directing us to do? Get ready and just wait. Because on April 18th, what's it going to do? May 15th is the next puncture. Right here, May 23rd. We have a window until June 2nd. Same thing, right? Let's look at the most liquid by volume stocks today. NVIDIA, right? That's a huge one. Everyone's excited. We got artificial intelligence. We need the chips to power it. AJ, do you see the same technique? I'm a buyer of NVIDIA above each of the blue lines as a puncture. And then James, when I see the puncture, it's a predecessor, an early warning tremor, right? Braxton Hicks contractions, false contractions before the actual birth. We're going to go long from February 13th until June 6th. There's another puncture. Where am I looking next? April 10th. I'm going to go long from April 10th until May 24th. May 24th closes. NVIDIA is at basically $320. And Billy, I'm a buyer of NVIDIA above the blue line, $322, $321, and that's a $60 gain using, yeah, just by a bit. So where does that number come from, right? Where does the 1.5 ATR value come from? And historically, the average true range was invented by a man named Wells Wilder. He used to live not too far from me up the road in Greensboro, North Carolina. I think he's out in New Zealand now. And he used to sell something called Market Delta Society, I think it was. He was a forecaster also. Not a very good one. There were a lot of holes in his theory that I think we've filled since then. But what the average true range does, AJ, is it measures. So let's say on a daily chart, how large is a daily bar on average right now? Is an average bar $5 big? Is an average bar $50 big? Okay. So when we use stops now, let's say that an average bar is $100. I don't know. No, $5. So if we're going to buy, Billy, at the close, let's say the bar opens and comes down and stays inside of that range. We'll put our stop 50% below that average true range. So it's sort of just outside of, AJ, that market noise, how big a bar is moving anyway lately. If market technicians have agreed, if you move 3 ATR values away, it is a trend reversal. So somewhere between a 1 and a 3 is a good place to put your stop. 3 is a little large. 2, I think, is sort of okay. 1.5 is about as close as we want to push it. And on the markets like the NQ, fast-moving, fast-paced, highly volatile markets, the Russell, I've seen customers stay as close as a 1. So a 1.5, we're sort of just outside of how big a bar is moving on average lately. And 1 or 2 ticks above, we're in. 1 or 2 ticks below, we're in, right? And so it doesn't matter what we look at, Tesla, Microsoft, AMD, MSFT, we'll see those same patterns play out. Microsoft looks weird. This one would have gotten us stopped out a couple times. We would have been long. Let's just mark it out, right? Long from here to here, 2040. We would have been long from here to here, and we would have lost $11. Then, if we wanted to, we could have re-entered if it came back up to here, and then been long until here. And then we are buyers here and then stopped out. And then buyers again, and now we're up. And then we can count that loss right there. So plus 20, 40, 45, 40, 30. You're up about $15 since then. And then if we look at, let's check out Apple, right, for options traders. Yeah, that's almost picture perfect right there in terms of calls and puts and what we're looking for. So that would have been a gain. That would have been a loss. And then do we ever get a chance to re-enter? We do right here. That would have been a loss. Then we would have had a gain here, another gain here. This little sucker got us in and out. And then another gain right here. And now on Apple, we have another signal today, as a matter of fact, until June 20th. Mike, are there other costs to consider besides the warp signal? No. It's a one-time, lifetime purchase. We already looked at Amazon. Meta would be another one, formerly known as the Facebook. Yeah, it's an even better, it's a great example of that puncture, look at the next signal type deal. So the next buy time is June 5th and July 6th for Meta. And we're buyers above to 63. Any questions about using it on a larger time frame? Right, we can look at SPY and Q. Kind of do the same thing. Can you put splits on the daily chart? Yeah. So you can take that thing that I showed you, and your long entry on the Qs would be there, your sell would be here, and so forth. 100%. Pretty cool stuff. Billy, I went over it earlier at the beginning of the webinar. It's just an advanced technique to look for intermediate times in between the buy and the sell signals. Yeah, Michael, people have been using it for the latest version of Ninja. Not a problem. So it really boils back down to, right, as we kind of wrap up right here. At the beginning of this, we sort of said, hey, we're the only company that's telling people in advance what's likely to happen in the big markets. E-mini, S&P, Euro, dollar, pound dollar, Bitcoin, Ethereum, Tesla, Q, SPY. And then we get together 2 days later and sort of say, hey, not only are we going to look and see what the signals did in general, we'll apply a basic trading system to them with rules that anyone can follow and see, you know, over time, does it make money or does it lose money? And then at the end of the webinar, we're just sort of left with this sort of scary feeling of, oh my God, it worked. What does that mean for my life? I was so good at losing and barely breaking even. You want me to learn something new? You want me to invest money into something that works? I don't know about that. I know you proved it in a way that was irreconcilably honest and transparent, but that makes me trust you even less. What's the catch? No catch. No catch. It's essentially, at the end of it, we're sort of left with this question. What is trading? Is trading about analyzing, and looking at what just happened? Hey, the volume was pretty high right now. Hey, that was a doji candle just now. Hey, my 20 period moving average closed right here just now. Most of you are trading with tools that are telling you what just happened. Unfortunately, that's not what trading is. Trading is what will happen. Will the market be higher or lower 1 minute, 1 hour, 1 day from now? That's trading. It's a future proposition. They call them futures for a reason, not present. Hey, I don't trade futures, man. I trade presents. Yeah, well, I trade historicals. So there. That's good. I got to use that. I like that. It made me laugh. I don't trade futures. I trade historicals. And we're the only company, I think, I'm the only knucklehead out there that has the cojones large enough to put the times in advance, come back 2 days later with you, give you the rules, the entry and exit rules in advance, and measure what happened over the course of a day or two and see, right? We can go back and look at days like yesterday, for example, the E-mini S&P yesterday. Billy, were you looking for longs or shorts yesterday on the E-mini S&P? Shorts. There's the signal. Never trade the open. 921 at the close of the candle. Exit by 957. That's a $500 move. Enter at the close of the candle. 1021 after the open. On a 3-minute chart, risk is even smaller. There's another $150. And you give some of that back at 1121. And then you take some of it back by 1257. And then you get short at 154. And make another $500. It's really not that hard. That's what she said. Questions? This works on range bars. It works on tick bars. This works on daily bars. It works on stocks. Works on SPY, QQQ, cryptocurrencies. It works on all of the futures markets. Anything that has a historical data trail. You tell it what time frame you want to look at. Click enter, and the times for the next day, 2 days, 5 days are coming up. That's the best part of this. If you look on my screen, you will see the signals are already here for tomorrow. Billy, I already have my orders starting at 7:05 tomorrow. These are the signals. I already know what I'm going to do when I get to those times. I already know that if there's a long stretch of time in between 340 and 210, that I can break that apart and look for a short at 240 and look for a long at 310. I can take this signal over here at 1010. I can break it into thirds and see there's a potential long or a pattern 5 at 1040, a potential short or pattern 4 at 1110. Yeah, we'll go over that right now, but I already have a plan for tomorrow. There are no surprises. There are 12 opportunities. probably 6 when we filter them out with trend, plus punctures. I'm not anxious about it. It is what it is. How do you get it and what's involved? What kind of coaching? Oh, we are back to the future trading, just like the movie. Minus Doc and Michael J. Fox. And when the website ever comes back up here, we'll actually have some information for you. Stand by. For some reason, it is loading very slowly. The product that we're discussing is the flagship product of the company called TachEon Warp. We're sci-fi nerds and weirdos here, so we like to name things after movies and TV shows that we watch, as close to copyright law as we can get. And the program that we're discussing is called the Warp product, kind of like warp speed. And about 98% of people, you'll see a lot of other products on the page, but it's the starting point for most people's temporal journey when they decide to trade with time signals. The program that they're using is the one on the very left, TachEon Warp. I just want to tell you right now that we do participate in the Trustpilot program. Right now we have a 4.7 out of 5 rating among actual traders, actual customers, people who are not affiliated with our company. If that's something of interest to you, you can go to the website, click on and see the reviews from people like you who've sat in a webinar like this, if you're interested. The Warp program is a NinjaTrader indicator. And so this is available for NT8 right now. NinjaTrader has plugins for Interactive Brokers and TD Ameritrade, Rhythmic. You can plug your Apex investing data feed into NinjaTrader and use that if you're trying to qualify. So you can connect NinjaTrader if you don't already have an account with them to Coinbase, for example, and you can see a lot of the cryptocurrencies live and get the data into there if you're trading with a cryptocurrency exchange. We'll go ahead and log that on. This webinar, like every webinar, is being recorded. In fact, while we're waiting for that page to load, I'll let you know, if you don't know already, we have a YouTube channel. I'm going to paste that link into the chat box, which is, I am very sorry. We'll paste that there. And you can subscribe, and those webinars, Billy, are usually uploaded to our Facebook page and our YouTube channel the fastest. So you can go back and see a week ago, there was our webinar from last week with all the signals there. All right, if you want the software, the program, I'll put the link in the chat box. Let me know if you guys see that right there. It should be backtothefuturetrading.com/TachEon-warp. When you go there, on the very bottom of the page, you're going to see a Buy Now link. And when you click on that Buy Now link, there's going to be a pop-up. There are numerous ways to receive supplemental education. First of all, there's a video archive. We have classes ranging from small 15-minute videos that describe very basic things you need to know when you get started, all the way out to areas of the archive that have hour-long webinars teaching advanced trading techniques. So that's included with your software as a primary foundation for education. Number two, we have a live training room. It's actually run by, the trading room is run by a customer who sat in a webinar like this over 10 years ago. And he trades live money profitably over time, shows entries and exits in markets like the S&P and oil. He uses a technique that actually brings his Elliott wave analysis into his timing signals. So when the two things line up, he lets customers know that there's a good chance it'll go up or down here. So if you want to see the signals live and sort of ask about them in a live market environment, Billy, that's an opportunity for people. If you don't want those things, you can go to checkout without that. And we do offer one-on-one tutoring and mentoring. You can meet with me, you can meet with my partner who trades. Ron right now is spearheading the Optimus auto trading program here at the company, so he knows about every trading setup you can think of. We also have pro customers that will meet with you if you need some extra help and guidance, people who volunteer their time to share what they did to qualify for a funded account, for example. So there are opportunities for ongoing education after the purchase that are there for you. There is a promo code, WARPOFF. WARPOFF. I'll write it down right here. WARPOFF. And when you plug that in, lowercase, no spaces, it takes $500 off of the price. Billy Dave will tell you about that. I'm sure he's in communication with you about that, and he'll make sure you get that for sure. But as you can see today, in just one day of session times in the oil market, the gold market, the S&P, that we're seeing, you know, plus 500, plus 1,000. Hypothetical, of course, right? We're not looking at a live trading account, but just following the signals that we gave out 2 days ago and the simple trading rules that we gave out before the markets ever opened, we're seeing pretty large potential gains. So cost effective, backed by 10 years of being in business, run by 2 engineers, not marketing people. I'm a horrible marketer. I just found out for about a year that every email I've been sending out to you was single spaced with no paragraphs. The email editor that I was using was outdated and it wasn't using line breaks. Most of you have been getting emails that look like they were written by Ted Kaczynski. That's how horrible we are at marketing. But when it comes to the other stuff, right? When it comes to the other stuff, I hope you've seen so far that not only do we know what we're talking about, we can predict these moves with great accuracy, but we've spent the last 15 years learning how to teach it to other people. And I think that's our biggest skill. When you're finished, you're going to know what you're doing. You'll be supported. Your emails will be answered. Your phone calls will be returned. You're going to be home. A lot of you have been searching for home, and I'd like to be that for you. I'd like to be a home for you. We've built a pretty good one, and I think you're going to like it here. Any questions as we sort of come around the final corner? Yeah, Billy, you get 2 computer licenses. So we just had a husband-wife purchase a few days ago. They're going to share those 2 licenses among them. I've had fathers and sons trading together. That's a pretty big sharing their 2 licenses together. I had a guy and his uncle an uncle and a nephew traded together. Every once in a while, I had one guy and his neighbor share the licenses. You can share your second license as long as it's not with a commercial entity. Like if you're not giving the indicator to a competitor or a programmer, then we get into some purchase policy violations there. But yeah, you're absolutely allowed to share it with somebody else. Some people split it down the middle. Hey, I'll give you half, you pay for half, and then we'll train together. It actually works better when you're trading with somebody that has the tool. You're learning together, and you actually learn faster. When you trade with someone else that has the same tool, you pick up on concepts about twice as fast. So if you can do that, it'd be a big boon for you. In the end, I hope today was educational, not my usual upbeat, entertaining session, but I just felt like I wanted to put it out there. It can be fun. We do have fun with it, but these are big moves. And there are scary things happening that have historically potentially never happened. It is, for example, I just learned this today. It is actually maybe in the United States' best interest to default on the loan, as China and Japan hold about a third of the debt. And if we default, it'll actually destabilize the Chinese economy. Think about that. We live in an age and an era where several hundred men and women may decide not to pay the bills, leaving seniors without retirement benefits, Medicaid and Medicare patients without reimbursements, to fight a financial war with another nuclear superpower. That's the world we live in. And the people closest to those people are banks like JP Morgan and Goldman Sachs and Credit Suisse and Deutsche Bank. Those are the people with their fingers closest to those buttons. And I think this program, this company, our history gives you some sense of how predictable those things are. We can see into the future and get a sense of what they might be planning. Billy, just look at the forecasts, go back and review this webinar and see where I predicted the high of the market and how far we've fallen so far using the size of the moon in the sky. That's just the size of a rock orbiting our planet and the reflection of light off of it. Warp is even better than that. So we do okay. You'll learn that the things that you're told on TV and the things that you hear through the idiot box, those are generally smoke screens, they're mirages, they're false flags designed to generate panic, designed to create instability and liquidity. When Jamie Dimon tells me there's a recession coming, there's almost always a move up. When Jamie Dimon tells me that the recession possibilities are over and everything is stabilized, it's usually a day or two before a huge crash. Companies like, what is it, Blackwater, Blackstone own shares of every major, they're a holding company for almost every company in the world, publicly traded or otherwise. And if you control the news, you control the politicians, there's a lot of power there. I don't want to go too far down that hole, but Billy, generally the news and the releases and the reports and all the stuff you see on TV, it's just theater. It is what Matthew McConaughey in The Big Short called a fugazi. A fugazi, it's a witsy, it's a whatsy. It's an illusion. It's fake. Data, historical patterns, that's real. And that's what we base our signals on. BlackRock, thank you. I'll probably be killed just for saying that name out loud tonight. If I'm not here next week, you know it's because I said BlackRock into the internet. So I love you guys. I'm going to miss you. Please send flowers at the funeral. May the wind be at your back. May it blow warm and dry across your skin. May the sun shine upon your beautiful, handsome faces, all of you. May the valley rise up to meet you as we walk across, and the mountains lay low, mountains of adversity and obstacles before us. I pray, I hope, I send positive energy out, affirming your dreams today. I want you to be the best at this. I want you to be the most confident trader you can be. We've strived for over a decade to be that place, to be those designers and tool makers, and I think we've achieved that. If you feel like you're ready to join up with our rebel band of time traveling insurgents, please don't hesitate. I promise the water's fine. You're going to be okay. And if not, if we're not for you, it's been a privilege sharing what I've learned across the span of my life's work with you tonight. I love you guys. Thank you so much for hanging out with me. Be kind to one another. Spread goodness and light into a darkening world. Do things. Check on your neighbors. Call someone you haven't talked to in a while. Act on that urge to do the silly thing that you've been thinking about. It's those things that matter and change the scope of human history, and it can start with us today. I encourage you to do that as we end here today. Webinar will be up on the YouTube channel. Please take advantage of the promo code here today. And God bless everyone. I'll see you soon. Take care. Bye-bye.